Hi. In this video, we will see outward supplies and what are the different types of supplies. We will see dual GST system in India, taxes to be paid in GST, outward supplies in GST, nil rated and zero rated supplies, as well as comparison of various types of supplies. First of all, do you know in how many countries GST is implemented in the world? Before implementation of GST in India, it was almost 160 countries where GST was implemented. And what we did, our government analyzed the GST system of various countries and adopted GST system of Canada. So, in this dual GST system, there is central government and state governments. As India is a federal country, both central government and state governments have the power to levy tax on goods and services. So we can see there are three types of GST, like CGST, that is called Central Goods and Service Tax. Then SGST, that is State Goods and Service Tax. And in Union Territories, it will be Union Territory Goods and Service Tax. And there is Integrated Goods and Service Tax also. For any supply of goods and service within the state, suppose it is in Maharashtra, supply is happening from Mumbai to Pune. Both places are in Maharashtra. So, CGST plus SGST will be charged. If the GST rate is 12%, 6% CGST and 6% SGST will be charged. Suppose the supply was done from Mumbai to Delhi, that is called interstate supply, and integrated goods and service tax, that is IGST, will be charged. Okay, so that is three different types of taxes. Then, I have already told you, if it is intrastate supply, CGST and SGST will be applied. And if it is interstate, IGST will be applied. So you can see this image and can understand and remember this concept. Let us take a bill. Suppose I had gone with my friend to have a coffee in a hotel. The coffee rate is 40 rupees. We had taken 2 coffees together. So the taxable value is 80 rupees. On this taxable value, GST will be charged, that is at 12%. So 6% CGST and 6% SGST will be charged. So it comes to 4.80 each. The total invoice value is 89.60, that is rounded off to 90 rupees. So this is the concept of a bill. So in any bill, you can see quantity, rate and amount, goods and services, and the GST rate, and you also check whether GST identification number is mentioned in the bill. Coming to the outward supplies, it can happen in any form, like sale, transfer, barter, exchange, license, rental, lease, disposal. These are the various forms of a supply. GST will be charged in any form. Okay. So I have given various examples for your understanding. Then, mainly there are 4 rates, like 5%, 12%, 18% and 28%. These are the normal supplies. And the business person or the supplier has to identify the rate and should charge the tax rate accordingly and should collect that tax from the customer using a tax invoice. Now, there are some other transactions which need your special attention, like zero rated, nil rated, exempted or non-GST supplies. Let us go and understand. Many times I have heard wrong answers on this aspect. There is a big difference between zero rated and nil rated, but sometimes we got confused. Okay, let us see. See, the supplies are classified into zero rated supply, nil rated supply, exempted supply, and non-GST supply. We will take one by one. First of all, zero rated supply means export of goods and services or supply of goods and services to a special economic zone, unit, or developer. Okay, for example, export of mobile phones to Australia or providing bookkeeping services to a company located in New York. These are exports. So these are called as zero rated supply. Why zero rated? I will tell you. Suppose these mobile phones are supplied inside India, then of course tax rate will be applied. That is 18% will be charged on the mobile phone sale. But when we are exporting, the government is telling you, see, you are exporting, you are bringing foreign currency, so you enjoy without GST. Indian products should be very competitive in the international market. So there is no GST on the exports. So please look at the image here. Any manufacturer from Kerala selling goods to an export-oriented unit in Maharashtra, that is called deemed export. For that also there is no GST. And later from Maharashtra it is exported to a customer to UAE. So that is called export. So zero rated supplies include both deemed export, which is a supply to export oriented unit, and exports, which is a supply to outside the country. So there are two options for exporters. One is they can pay the GST and get the refund of that amount, or they can file LUT, that is letter of undertaking, and bond. And in that case, they don't want to pay any GST. Without paying any amount, they can export the goods. Then the second category is nil rated supply. What is a nil rated supply? The goods or services with a 0% rate. The difference between zero rated and nil rated is zero rated goods is charged in India but not charged out when we are exporting. But nil rated goods is not charged both in India as well as outside India. Okay, so it is 0% everywhere. So it includes cereals, fresh fruits, vegetables, salt, natural honey, milk, human blood, etc. Then the next category is exempted supply. Exempted supply means the government has given an exemption through a notification. For example, the laddu supplied in Tirupati temple is exempted. There is no GST on that laddu, as it is given as prasadam. And when you are purchasing any branded laddu from any bakery like that, GST is applicable. But when you go to Tirupati and get laddu from there, there is no GST. That is the difference between exempted supplies and the normal supplies. Then the fourth category is non-GST and non-taxable supply. What does it mean? Non-GST means these goods and services are outside the purview of GST law. You take electricity, petrol and diesel, alcohol for human consumption. All these are non-GST or non-taxable supplies. Clear? And let us now conclude with the difference between zero rated supply and nil rated supply. I have given a detailed differences between all zero rated, nil rated, exempted and non-taxable supplies, but here let us see only zero rated and nil rated supplies. Zero rated means exports and deemed exports. Nil rated can be domestic transactions. For zero rated, GST rate is there in India, but when we are exporting, it will be zero. But nil rated goods is 0 in India and outside. Then examples, mobile, the GST rate is 18% when it is sold in India, but when we are exporting it is 0%. And for nil rated milk, fruits, vegetables, etc., which is charged at 0% everywhere. Then for zero rated, no GST or GST paid is refunded. Nil rated, no GST. Then the biggest difference is, in case of zero rated, ITC can be claimed by the supplier. Input tax credit can be claimed in respect of such supplies. Suppose some raw materials are used for zero rated supplies. The supplier can claim that input tax credit, which the GST paid to the supplier of that raw materials. But such input tax credit is not available for nil rated. Then the documents coming for zero rated include invoice, letter of undertaking, bond, etc. For nil rated, it is bill of supply. So hope you have got a clear understanding about the concepts, that is dual GST system, taxes to be paid, outward supplies, then the difference between zero rated, nil rated, exempted, and non-taxable supplies. Thank you.